All right, good afternoon, everybody. Event Trader here. I'm going to be joined by a couple of people on the trading team as we are going to be discussing the emerging growth list, providing a little bit of a backdrop on where the list comes from, why we do it, and a little bit of color on some of the names that we are looking at. Going to be joined by Robert Reid, Scalp trader. Damon Southward's also going to jump on with us for a little bit here, and I think Scott might also jump on, trying to get him in here. But Robert, is that you coming on here?
Yes, can you hear me?
Yeah, I can hear you just fine. Damon, you on with us?
I am. Can you guys hear me okay?
I can. So, first we're going to just go through, and Robert, I'm going to kind of let you tell everybody about the emerging growth list, give them some of the backdrop on how you put this list together, why it's important, what are some of the characteristics and names that you're looking for, and as we go through that, I'll drive and take a look at, I'll drive people around on the product on the site here. So, Robert, without further ado, why don't you give us a little backdrop of the emerging growth list?
Yeah, emergent growth is basically it's a quantitative scan where we put out a bunch of parameters for we look for revenue growth, profitability in the most recent quarter, relative strength in the upper half. Margins are expanding, things like that. A bunch of different parameters we put into the scan that generates a list every week. And the idea here is to kind of create more of a try to go a little bit more in depth in terms of the fundamental analysis than we would in other parts of the site. So it's a good way if you're kind of more of a buy and hold or a swing type investor. These kind of ideas are good to hold. I mean, just as something you don't necessarily have to watch every day, but they're ideas that we do tend to like. With that said, we would use a 15 to 20% stop loss limit on every purchase, just to make sure, to kind of limit your downside. So, but anyway, every Monday we put out this report, and there are basically, it might get a little confusing because it says 100 names on there, but it's really not 100 names. Basically, a stock needs to get into, we run our scan. So let's say if a stock hits our scan at 72, we don't track it. Then it might go to 55 the next week, and then down to 81 the next week, and we're still not tracking it. It's not until it actually hits the top 25, when it gets to, like, say 17, then we write a little blurb on it. We do some analysis on it, and then we sort of start tracking it at that point where it's been, we buying it, sort of, is the way to think about it. So every week there's usually about 2 to 4 names that get added every week, and then a handful of names also get deleted each week if they fall out of the top 100. So, and as I said, we just look at those certain parameters that we like. And one thing actually Damon had mentioned this, that a lot of times is a lot of these names, because relative strength is an important part of it, it might make sense to necessarily, because a lot of them have been on a pretty strong uptrend, that you might want to wait for it to pull back to, and then use it as a buy and hold there. But the fundamentals are in place. It's not really a technical type of a report. It's more of a fundamental buy and hold kind of thing. So anyway, that's kind of the parameters here. And then, so basically in the report itself, we'll go a little in depth on the what are the additions are. We'll mention what the deletions are. We also have an upcoming events. So basically any of the 100 stocks will basically, if there's any events coming up, either they're reporting earnings or maybe presenting at a investor conference, things like that. So a lot of times you can actually access the webcast if you go to the company website to if you want to get a little more in depth yourself in terms of what's going on with the company. And then the bottom part of the report is basically the table that basically has all the stocks we're tracking. And just real quick, if you happen to see it, so when you look at 26 to 100, if you look at the far right column, some of them have a date added and a gain loss. If that if there is something in those columns, that means we are tracking it. It means it did hit the top 25. It has fallen out of the top 25, but it's still in the top 100. So that's why we're still tracking it. But the majority of them have never actually made it to the top 25. But we do. But anyway, we just want to create this list to kind of give ideas. And even if we're not tracking it, it might be interesting for you to kind of poke around on it and see if it's a name you might be interested in. So that's just kind of a broad overview of what the report is. We've been doing this for it's got to be close to 10 years now. I think as we started in '09 at some point. We don't necessarily have a hard number on what the returns are, but I know just anecdotally it does produce some pretty interesting ideas, and so that's kind of what it is overall.
Okay, is there any sort of minimums for the market cap or average volume that would just keep a name from getting in here at all?
We do have minimum market cap. I can't remember if it's 250 million or 500 million. I can't remember off the top of my head what the downside parameter is. We do have an upside parameter too, where if it goes above 10 billion, it does get cut. Like we try to keep this as a small to mid cap idea generator. So once it gets to above 10 billion in market cap, we do bounce it out of the rankings because it's getting too large at that point for what the purpose of this report is.
What about for average volume? Any minimums?
We do have, yes, we do have average volume. Yes, certainly. We have average volume minimums. We have, yes, it basically has to have some. We don't want thin stocks and we don't want really small cap stocks. It's kind of that. I think it's between 250 and 250 million, and then 10 billion on the upside is what it is there. And we do have an average minimum. Again, I don't know what the parameters off the top of my head, but I think it's around at least 100,000 average daily volume. But most of these stocks trade well above that. That's just a real bottom side parameter.
Okay, and any sort of impact from float or short interest?
I don't think short interest is part of it. Float. I'm not sure if float is part of it too. I think we do list that in the table itself.
So you just provided in the table information.
Yeah, okay. Everything in the table is, a lot of the stuff might just be informational. It's not necessarily a parameter on which we're cutting or including stocks. It might just be, here's just some extra data on a company. So that might just be, for some of the parameters that's the case.
And the quarterly EPS beat and rev percentage and rev beat, that would be from just their last earnings report, obviously, right?
That's correct, yeah. And that's another thing is the company needs to have, it's at least 10% revenue growth. Much have higher than that, and we also are looking for EPS growth. The company needs to be profitable in the most recent quarter. Like sometimes we'll have companies that make the rankings, but then, they might be teetering around profitability where they were profitable, the next quarter they're not profitable. So they would get deleted from our list if they're not profitable in the most recent quarter. So unfortunately, that it's kind of because the stock may still look great, but we kind of have to draw the line somewhere, and we do want we want a company to be profitable in the most recent quarter.
All right. So Damon, as a gentleman that's always searching around for some good ideas, possible big winners, I know you use the emerging growth rankings a lot and keep an eye on this. Do you want to explain to the subs how you would go about using the emerging growth rankings and unearthing a lot of your ideas? Because I know a lot of people are always scratching their head on where you're coming up with some of your plays that just really hit some volatility, and I know this is a place where you like to go fishing.
Yeah, I think that actually I own two of the names currently on the list, Teleria and Rubicon Project. I noticed over the years that you'll have groupings of names that hit this list. So like both of these are ad industry plays. I think the Trade Desk is on here as well. And, as you know, I like to trade volatility in kind of theme-based names. And right now, advertising is a big theme in the market, and so you tend to get kind of short-term as well as intermediate-term volatility based on news events. So like the concerns about Google changing some of their ad policies has created a tremendous amount of volatility in TTD, TLRA, and what was the other one?
Rubicon.
Oh yeah, Ruby over the past couple days. And actually, I was looking to short some TTD this morning on the analyst defense, and I decided to go short YY instead, and just picked the wrong one because I just really felt that the market was going to roll over. But I was thinking that TTD would continue to have some volatility based on these concerns about the Google ad changes. So I guess in general, I think a lot of the kind of mid cap and smaller cap names that I tend to come across, sometimes I come across them independently, sometimes I find them here on the emerging growth, but there's always, some interesting ideas that flow through here.
All right, so let's take a look at the two most recent additions. One of them I know pretty well. I've been trading HUYA a bit here and there. The other one, Top Build, I don't. So, Robert, you want to break in to these two new additions, and if you can, maybe provide a little bit of color on why they would have been added to the top 25 this week.
Yeah, that's a good question. The two names are HUYA and Top Build, which is BLD. HUYA is it's an online gaming platform in China. They do a lot of esports live streaming in China, and basically it's really popular. They're also branching into other areas like talent shows, anime, and outdoor activities, things like that. It's just the growth is just phenomenal. That's a big reason why it actually got onto our rankings, is the growth is so strong. And this is actually a recent IPO. I think it came out in May of 2018. And initially the stock went from 15 to 50 by mid-June, and it's been trending lower since then. But I kind of like how it's been actually acting since the beginning of 2019. It's gone from about 15, it's slowly gone up to about 25. I think that's a good thing because it kind of shakes out a lot of those momentum players who bought it on the IPO, whereas I'm more of a buy and hold swing type person, and I kind of like how that. I think a lot of those people got shaken out, and then HUYA's kind of on a slow uptrend, and that's a good reason why it got back into our rankings, because it was not in our rankings when it was dropping from July to pretty much the second half of last year. It was pretty much on a steady downward slope, and it's really been coming back lately, and that's what our scan picks up. Like this one is showing good relative strength, in the past few months, and that's a big reason it got on there. And I think they also had a big quarter. The Q4 results were really strong as well. This one, and with that said, I mean, I do like it, but it is a little bit speculative. It is a Chinese gaming name, and a lot of these names have just huge growth numbers and gaudy, growth statistics, things like that. So I've never actually used the HUYA platform, so I can't really speak from it firsthand, but the numbers do look very good, and I actually kind of like how the stock has been trending since the beginning of this year. But there is a degree of speculation here because it is a Chinese gaming name, so just something to keep in mind.
All right, Damon and Scott, you're on with us now too, right? Scott, you there?
Yeah, that's correct.
Okay. First, Damon, any thoughts on HUYA here? I know you've traded this one in the past.
Well, actually, I've traded HUYA, and I kind of like YY, which is his parent company, a bit more, just based on valuation. Actually, I think YY trades at a smaller market cap than HUYA, even though I think YY owns most of the company, which is somewhat unusual. I mean, I trade around YY, and I've been actually waiting for a pullback in order to get on a swing position. But like I'm looking at YY, which I think is the majority owner of HUYA, it trades at a 6.7 million cap. Versus
I think you're right. YY spun them out last year. Yeah.
So HUYA's cap is 5.3. So HUYA's cap is a little bit less than YY. So it is smaller, but I think YY has a bunch of cash too. Here, let me pull it up. So yeah, I'm sorry to kind of take us into another name, but I think
that's all good. It's all about trading ideas, Damon. Yeah. So
well, it's funny. The charts are actually pretty similar because they both peaked around June of last year, and then they dipped to around late December this year, and they've been slowly coming. Or December 2018. The last few months, they both have been kind of trending slowly up. So it's kind of funny that they're both trading together. But I guess that's not entirely surprising.
Stepping on Scott's
I know. Here I'm becoming
here.
A technician.
Stepping on Scott, you got any thoughts on the charts while Damon's looking that up?
Yeah, HUYA obviously has had a good start to this year. These IPOs, the IQs, and the Billy Billies all were fantastic last summer. Then they obviously turned a corner and got too overextended and fell out of favor going into the end of the year. But overall, I think if you got to track the space here, and if HUYA is on top of the emerging growth focus list, well, that qualifies me to basically have a long side bias, and I would just basically apply simple technical analysis the way that I do to liquid momentum. You want to track key 50-day moving averages, 20-day moving averages. Heck, slap on a Bollinger Band, and if that thing tests the lower Bollinger Band and you see price action reversing off of it, that's a good potential swing trading opportunity or a potential to add to that stock. So the trend is your friend when it comes to all these focus lists.
All right, and Damon, you got those numbers on YY?
Yeah, it looks like they have about 1.5 billion in net cash. So market cap of 6.7 billion approximately, and an enterprise value of 5.1. So their actual enterprise value is about the same as one of its subsidiaries. So I thought that was interesting. So I was kind of a fan of HUYA earlier until I came across YY and realized it's almost like a cheaper version of it. I actually own some personally that I own from probably about, maybe 6 months ago. And I've been waiting. It started to rip. It kind of caught me off guard that this recent rally, just how far it's run. And so I've kind of been hoping for a pullback into the mid to low 70s in order to establish a swing position in it.
Scott, you got a preference on the charts between YY and HUYA?
No, like Rob said, they do look very similar. But listen to Damon; he's convinced me to go after YY.
This is like Bizarro call with Scott going after the fundamentals and Rob going after the technicals.
I also favor higher price stocks for their volatility. Although HUYA is pretty volatile with a low float. So, yeah.
Okay. Now, just real fast to recap for the people listening, we are talking about the emerging growth stocks. For anybody that's looking to find this, you would go under the investing and trading ideas, and we were talking yesterday about the liquid momentum. We talked a little bit earlier today about that TA page scan setup for the zippers. And under that same section, under the fundamentals, you could see that emerging growth stocks tab there. So anybody that wants to follow along with what we're talking about, that is the area where you could find all the information on this emerging growth.
And just to add to that, I would also create an email alert for GROWX if you want to get an email alert every time. The report gets published every Monday afternoon. So if you do want to get an email alert when it's published, you can set that up. And GROWX is the ticker. And not only will it get you the report that goes out every week, it also, like if we do any commentary during the week on in-play, that'll pick that up as well. So there's something to keep in mind.
Wow, so somebody who's been writing this for 10 years understands how to set alerts for this. Scott, you got any thoughts on this?
I have no clue what you're talking about.
You didn't alert people to the liquid momentum yesterday, recall?
No. Again, I don't set alerts for columns that I actually write and post to the site.
Fair enough, but if you want to get alerted on GROWX, there you go. You add the GROWX to your list. Liquid momentum, you would add the LiquidX to your list. So these are the best ways to follow these articles. Now, Robert, I was talking to you earlier, and you liked HUYA, but you really were a lot more interested in the number 18 edition, which is that top build, ticker symbol BLD. You want to give us a little breakdown on what they do?
See, for me, as more of a fundamental person, that I think I understand the business better. Is I think why Top Build kind of interests me more. What they do is they're a large installer of insulation. So when new homes get built, they come in like as a subcontractor, and they come in and they install the insulation for a general contractor. So they'll come in and not only that, but they do more than just insulation. They also do like shower enclosures. They'll do rain gutters. Things like that, windows, garage doors. So basically it's a play on the housing market. And a couple of home builders had some nice reports this morning. And I think top build is another way to play. If you think that mortgage rates are going to stay low, and it sounds like the Fed is going to keep is going to not raise rates for the rest of the year or a good chunk of the year, so that should be good for the housing market. And top build's a way to play it. So not only are they good in terms of insulation, just in terms of the business itself. Another reason I like it is that this is a very fragmented business. Like installation, I know that's going to be a tongue twister. Basically, throughout the country, it's a very fragmented business. A lot of mom and pop shops, a lot of small family businesses do this. So what TopBuild is doing is they're going around buying a lot of these mom and pop stores and small family businesses to create scale so that they can be a massive supplier. So now they're a national supplier, which gives them a bunch of advantages. Not only do they get to buy insulation on a larger scale, so they probably get it for cheaper prices, they also get to work with more general contractors who want to just deal with one vendor to handle all of their insulation installations. So so it's good for that too. So, and then finally the valuation looks good. It's trading at only like 14 times earnings this year. So I think it's overall, it's if you like the home, if you think mortgage rates are going to stay low, that's going to keep fueling home building, I think top build is a kind of a way to play on it. So I like it from that perspective.
So you'd definitely be watching that KBH and Lennar earnings and the commentary around there as an indicator for top build.
Absolutely, and just the housing data in generally. Whenever that hits, our website, if strong housing starts, things like that, that's great for top build.
So what do you do in types of where you've seen a divergence between the Lennar and KBH and then the weaker housing data that we saw yesterday? But I'm assuming it's more of a trend thing and doesn't really react to one earnings report or one economic report.
It's more of a trend. I mean, I think the good thing would be if you listen to the home builder conference calls, I think that's kind of when a lot of the more candid comments come out, and that will give you a much better sense as to how the market's really doing and what their outlook is for it. But it also just, I think it's going to be a strong home building market in the next few years. I also follow steel stocks closely, and like Nucor and a couple of other names were saying that construction was really bad in the fourth quarter because of weather, but they say they're all expecting some really strong construction activity this spring and this summer to kind of make up for this pent-up demand. So I think top build is kind of a play on that. So the steel companies are also a way to kind of monitor that in addition to the home builders, and but top build is kind of a less obvious way to play it instead of the home builders, but it's just a name to keep on the mind. And another one in this space is also Installed Building Products, IBP. They're kind of a smaller version of top build, but they do the same thing where they go around and buy mom and pop insulation companies, and they're also a play on the hopefully the upswing in the home building market this spring and summer.
That's a nice tip because of the two. The IBP looks a little bit more enticing to me. Damon, is anything Rob's saying here on BLD enticing you on this one? You just watching it here? You excited about it?
So companies like this, in terms of long-term investments, unless it's like really under the radar, like for example, a recent IPO, and the market's just not familiar with it, there's just not enough volatility or excitement for me. However, I mean, as I was listening to Robert talk about it, and this is one of the ways I use the emerging growth and Robert's analysis in particular. And so in, a 2-minute conversation, he just informed me about a name that I never would have researched on my own, never would have been familiar with. And it's a rate play, and so with rate volatility, like I'll stash this one away, and when you start to see volatility in rates, and say the market, for example, I mean, if I had known about this name a few months ago, because I came in and bought a lot of rate plays once I realized that the Fed was possibly going on hold, this would have been a name that I probably would have bought as a rate play. And I mean, if you look at the price action since the end of December, we're going from $43 to 66 here, and so it's one of those names that's really under the radar, and it doesn't trade with it's not like software or tech where kind of everything trades together. It's, and it's, you have a lot of momentum money moving, splashing in and out of it. This type of name, $2 billion mark, $2.5 billion market cap. Is that right? No, I'm sorry. I have the wrong.
Sounds about right. Let's see.
Here, let me pull up the.
Market cap's 2.2
Yeah, 2.3. Yeah, 2.3.
310,000, 34 million float, 2% short interest.
Yeah, I mean, so something like this can see a lot of movement just based on fund flows. Maybe they're in some smaller cap or, mid cap index. You get funds flowing, people pulling funds out of money out of funds, and, it can hammer a name like this. And if you understand kind of the market situation and the different cross currents, you come in and take advantage of a name that's being possibly pushed down by fund flows, but the fundamentals suggest that maybe it shouldn't. Maybe it should be at a higher price. So that's how I will look at a name like this. I mean, it becomes kind of more of a trading vehicle based on kind of the market, just fund flows moving it, and maybe it becomes overvalued over a period like 2 or 3 months, and you might be able to pick up a 15 to 20% swing trade in it.
All right, Scott, from your perspective, BLD or the installed building products that Robert mentioned as secondary play, IBP, either one of these charts jumping off to you?
Yeah, again, this isn't a space that I would really be overly interested in trading overall, but again, you hear somebody like Rob come on and give the story behind it, and I'm in the same camp with Damon. It's like, wow, this was never on my radar, but then you see someone talk about it and give their thoughts and the prospects for it, and you start getting a little bit intrigued about that space and the peers and whatnot. So this name, it is a low floater. It's got about 35 million shares in the float. So from a trading perspective or from an investing going with the trend and momentum here, that's something you always have to consider, I think, if you're involved in these emerging growth names. They tend to be small to mid-cap names, a little bit more volatile. If you're going to be swing trading them or day trading them, I wouldn't really suggest day trading them, but if you're going to be in them for the trends and momentum that's at hand, you're really just going to have to position sizing and risk management are going to be absolutely critical. A name like BLD or IPB, where they've had these steady grinds higher over the last 3 months or so, you're not going to see any sort of significant pullback, say like on an indicator. You're not going to see RSI getting into oversold territory, or stochastics for that matter, because if that happens, the stock is probably going to be down 20%. Some sort of headline is going to create that. When you have these nice steady grinds higher over a couple of weeks, your best bet's usually to narrow down your time frame into something like a 60-minute perspective, and then use something like the RSI or stochastics or even a MACD. And when they signal a reversal happening after a minor pullback of sorts of 5-10%, you can actually have some confidence to jump in there with the trend that's in play there. So. All
right, and then Rob, one deletion this week, Chef. You want to explain to people why Chef might have been deleted, and does this at all fall, if it is deleted, onto your short radar at all, or do you not really look at it from that perspective?
No, we don't really look for short ideas. It's kind of it's mainly just kind of a long, it's for a buy and hold kind of person. So we don't really necessarily go short on things. Chef, actually, it's funny. I actually like the Chef story. They do a lot of. They basically are distributors, food distributors for high-end restaurants and for hotels and things like that. And they're kind of a unique situation. But that one actually fell out probably because the relative strength started to wane since their last earnings, so I think that's why that one kind of got bumped. And that's one thing about emergent growth. sometimes it is like a hockey stick higher, which is unfortunate, but it also kind of protects you. It gets deleted when it starts going the other way. So that's the nice thing about it, is because when the trend goes the other way, then it kind of like, okay, the scan says, okay, let's cut our bait. It goes cut here and then move on to the next idea. So so that one, we did take a loss on that one, 16%. It was up 9% at one point, but it was a little bit of a loss for us. So, but anyway, I do like the fundamental story, and that's another thing I like about emerging growth, is that you kind of learn about a bunch of different industries. You might learn about software and insulation and food distributing, things like that. But you kind of get a sense for different areas that you may not necessarily look at, and that's what's good about the emerging growth, where it's not necessarily tied to any one sector. It's just looking for good growth ideas across a bunch of different kind of sectors. So I think it's a good resource for people if they're looking for buy and hold ideas.
All right, great. And real fast, Rob, TLRA, I know we're talking about it. It's number one right now. Damon, you and Craig are both involved in this, I believe. Robert, one of the things that you noted was that this could potentially fall off the list. Basically, it reported a profit in Q4, but a loss is expected in Q1, you note, which would drop it from our rankings. So you want to just explain to people why that is, and kind of show that it doesn't necessarily pertain to a lot of volatility to this list in most cases.
Yeah, well, actually, it actually kind of brings up another point that Damon was making earlier. Is a lot of times emergent growth will do things in trends. And actually, Rubicon and Teleria both got added on March 12th together, and they both do very similar things. They do like online, basically advertising for companies where they set up exchanges. Where they're a little bit different than TTD, because I think one's on the buyer side, one's on the seller side, whereas TTD is the actual exchange itself. So they're different, but it was interesting
These
that
guys
they both
would use TTD to find buyers and sellers.
correct. Yeah, I'd have to look at it again off the top of my head. I know, like Teleria like represents the sellers. Like, let's say if you own a website, you want to fill up, you want to get advertising on your website. You're a content provider. You're considered a seller. So basically, you would use their platform to help you find, online ads that you could stick onto your website, things like that. I don't know all the technical parts of it, but that's kind of just the bird's eye view of it. But they did get added at the same time, which I thought was interesting. But you're right also that they will get deleted. And unfortunately, this does happen with emerging growth. Is if they'll be profitable one quarter and then the next quarter they're not profitable. And right now there's only one analyst estimate, but it's for 11-cent loss in Q1. So if that is the case, they will get dropped from our rankings when they report Q1 unless they report a surprise profit.
All right. Well, I think that's going to end our discussion here on the emerging growth. Definitely a big thanks to Robert for joining us, of course, and Damon and Scott as well. I know the subs always love hearing your guys' perspective on this. And we're going to end this segment. We're going to run it, though, on a more regular basis, hopefully once a week, as we can break down some of the additions and talk about some different trading ideas. But Robert, you take care of yourself, and we look forward to hearing more about the emerging growth list going forward.
Sounds great. Thank you so much.
Okay, talk to everybody soon.
Bye.